So, Joanne, do you want to hit the record button and we'll make a start?
Done.
Great. So without ado, let me formally start. So hello, everybody, you're all welcome. My name is Samantha Musoke, and I'm the project director for IFR4NPO from Humentum, dialing in from Uganda, where I've lived for 20 years. You're really very warmly welcome as invited participants from across Southern Africa. So this is, I think, are we on the fourth of the regional events, fourth of 13 regional events that we'll be holding in coming months. And this is the first of 2 sessions that we'll have together today and then next week on Wednesday. I'm joined by Karen Sanderson, who's the IFR4NPO project director at CIPFA, the Chartered Institute of Public Finance and Accountancy, and she'll be taking us through the majority of our time together. So if you haven't yet already, please do take this opportunity to go into the chat and introduce yourself with your name, organization and country so that we have a sense, so that we can all have a sense of who's with us today. So on the slides, you can see our agenda for today. So we've got 2 hours and we've got quite a lot to get through. So we will move fairly swiftly through and respect your time. If you have any comments or questions as we go along, please do use the chat function and we'll do our best to answer these as we go along, or if not, follow up after the meeting. We're really looking forward to hearing your thoughts as you share them in the times that we've set aside for the breakout groups and feedback. And just to be clear, today's discussion is intended to help you better understand the consultation paper, so that to build your confidence to submit a response, and crucially for us as a project team to hear your thoughts and get a kind of regional flavour for some of the issues that are discussed in the consultation paper. So the comments that you make today don't constitute a formal response which is logged and has to be responded to and is formally fed in. So we would still encourage you to submit a formal response separately. And we'll show you how to do that at the end of next week's session. So I know that some of you attended the country awareness meetings that we've been having in recent months, but for some of you, this might be your very first meeting with IFR4NPO. So we'll just start with a very, very brief introduction, project overview to make sure we're all on the same page. So some of the current challenges experienced by non-profits, as well as their funders and auditors and regulators, stem from this fact that there's no internationally agreed standard for non-financial reporting. I'm sure we've been hearing, well, it's been a talk on social media and in the press about localization and getting funding to organizations on the ground doing work around the world. And part of the barrier to that is credibility of financial statements so that the donors have confidence when they're doing due diligence. So there's a lot of different problems that arise from the fact that there's not this international standard. We get inconsistency within and between different countries. We get duplication of effort producing reports for different users because we don't have a standard general purpose format that's designed to meet a range of users. And ultimately, it's a high burden and a high costs, especially for non-profit organizations and also their funders. I should also mention, when I say non-profit organization, many of you might be familiar with the word NGO or other terms in the sector. We'll dig into that a bit more later, but NPOs, NGOs and other non-profits. So some of these problems, fundamentally, what they do is they damage the trust and the credibility in the sector. And those countries that lack national standard for non-profits feel it particularly acutely. So it's our hope that once the guidance that we're developing is widely adopted by different jurisdictions, and once it's endorsed as best practice by donors, it will help build a more resilient and accountable sector. And it will also create a level playing field, or support the creation of a level playing field for access to funding, bringing more equity. So we have a big vision for what we're trying to achieve. So in terms of who's actually managing the project, it's being led by Humentum and CIPFA in partnership. Okay. Karen, do you want to move the slides up? Perfect, thank you. And Humentum and CIPFA are both non-profit organisations ourselves. So it's really fair to say this project is by the sector, for the sector. It's the sector coming together to develop standards that are in the interests of the sector as a whole. The project team is actually very tiny, but we have crucially some wonderful volunteers and advisors who help us. So we have a practitioner advisory group, otherwise known as the PAG, drawn from different parts of the globe. And these are from non-profits and donors, and auditors and academics and regulators. And then we have a technical advisory group drawn up from accounting standard setters, again, from 5 continents across the world. We're also supported by our country champions who help us to raise awareness of the project in their countries and have obviously that crucial understanding of the local context. And we are currently building a donor reference group. I had some great news this morning that the FCDO, that's the in the UK, oh my gosh, the words have escaped me. The Foreign Commonwealth and Development Office in the UK have just agreed to join the donor reference group together with the World Bank, USAID, and a number of foundations, which is super. So that's really growing now. And then we are overseen as a project by a small steering group of independent people that help the sort of governance of the project as a whole. And all these wonderful members work on a voluntary basis, and you can see more information about them on our website. So with us today, let me see who we have with us. I have seen that we have Ed Shoko, who's our country champion in South Africa. We have Sally Ross, who's been supporting our country champion in Zambia. We have Innocent, who's on the PAG in South Africa. I don't want to miss anyone. Are there any other else here who's one of our PAG or TAG members? Not that I can see, but so we really want to especially recognize each of you. And thank you so much for the contribution that you've made in helping us get to where we are so far. In terms of the way the project is actually working, we're delivering it in 3 phases, consistent with the processes used in all standards setting in international accounting standards. So we've just completed the first phase with the publication of the consultation paper at the end of January, and we're now moving into the development phase. And these meetings that we're having will provide important input to the project's next steps. So our timetable for the rest of the project will depend a bit on the amount and the nature of feedback to the consultation and funding, etc. But we're working towards a draft of the guidance for mid to late 2023 and final guidance in 2025. So you can see from this snapshot of the map that we have made fantastic progress in raising awareness and engaging stakeholders all over the world, but we still have a long way to go, and we look forward to your help and support in helping us to get the word out so we get more participation. So with that brief introduction, let me hand over to Karen Sanderson from CIPFA, who will take us through an introduction to the consultation paper and our topics today. Thank you so much, Karen.
Thank you very much, Sam. Apologies, I'm running the slide deck here, but my computer is being very unresponsive today. So I'm trying to click to the next slide, but it's not wanting to work, but I'll keep talking until that happens. So as you've heard, the objective of this project is to provide guidance that is internationally applicable and that can address known problems for NPOs and their financial reporting. And the project has, I'm really sorry about this, I'm going to have to try and move this on to the next slide. The project has 3 objectives for developing the guidance. The first is improving the quality, transparency and credibility of financial reports from non-profit organisations with international high quality guidance that is relevant no matter where you are in the world. The second objective is about providing information that is useful to the users of financial reports, and in doing so, balancing the needs of users with preparers, recognising that that's important. And the third one is around addressing accounting issues that are specific to non-profit organisations and that help promote comparability. And all the proposals that are in the that we're taking account of in developing the guidance will be made with reference to these objectives. So we'll keep coming back to this in framing what we are doing. So in terms of the consultation paper, if we just start there for a moment, I mean, this has really been developed to start the conversation, to engage with you and others across the world about what is needed to improve financial reporting for the sector globally. The consultation paper contains a lot of information. For any of you that have opened that up.
Coming your way today or
Sorry, could whoever's speaking just go on mute? Is everybody on mute?
I sent you that was like what I sent you was.
Thank you. So the consultation paper includes a lot of information, but the main parts of the consultation paper that you should go to are part 1, that covers the general reporting issues, and part 2 that covers the specific accounting issues. Part 1, which is going to be a lot of the focus of the sessions that we have, is divided into 5 chapters. And in our meeting today, we're going to be looking at the first 3 of those chapters. And that's looking at what types of organisation we think is going to benefit from the guidance. And of course, what is at the heart of all standard setting, what are the needs of users and what information do they need? What's of common interest to them to form sort of general purpose financial reports that they can all use to understand the sector. We'll also be covering today what is in chapter 3 of the consultation paper, which are about the 2 core premises that sit behind the guidance. In our next meeting, we'll consider the final 2 chapters that look at the extent to which current international standards meet the needs of non-profit organisations and the model that we propose to use to leverage both international and national standards going forward. So this is what constitutes part 1 of the consultation paper, and the consultation on these chapters closes on the 30th of July of this year. The other part that we urge you to focus on is part 2. And part 2 of the consultation paper looks at specific accounting issues. In our next meeting, we'll look at the overview section and whether we've captured all of the issues and have we prioritised them in the right way. And that will cover all aspects of accounting issues, like the ones set in front of you: reporting entity, accounting for incoming and outgoing resources, balance sheet items, and the presentation and disclosure of information. We're going to be holding further outreach sessions on the individual topics later in the year to get into those in a bit more detail. And because there's a bit more to do here, the consultation period for this goes a bit further, and that closes on the 24th of September of this year. So those are the principal parts of the consultation paper that in responding you should focus on. So now I'm going to turn to the topics for today, and firstly our topic number 1. And included within here is looking at the definition of NPOs, as well as identifying stakeholders and their needs. So looking at defining NPOs first, in the consultation paper, we propose that organisations are defined with reference to 4 broad characteristics. We don't believe that in being able to provide a international applicable guidance that we can use a single definition that's going to meet every organisation's needs. So we've gone for a characteristics type of approach, and as Sam said, we're using the term non-profit organisations, but you might be more familiar with terms like NGOs, charities, and of course remembering that this includes institutions like churches, membership organisations, and could even be universities and healthcare type organisations. So potentially a very, very diverse sector. So with a characteristics approach, our view is that an organisation might be a non-profit organisation if it meets any combination of these 4 characteristics that are on the slide in front of you. 3 of those characteristics focus on operating in a way that means that resources are used for social benefit and not to provide a financial return to the providers of resources. So the focus being on delivering services for public benefit, that profits and surpluses are directed for public benefit, and assets are held for social purposes. We also include in our characteristics that voluntary donations or grant funding may be a significant part of how an NPO is financed. This could be significant in differentiating a non-profit organisation from government organisations, where governments are funded from taxes, which I certainly don't think are voluntary. So there is a slight difference in how those work. Also, we recognise in defining non-profit organisations that there are already international definitions out there. There are those that are used by statistical bodies globally, but these frameworks don't take account of the types of financial reporting issues that we believe non-profit organisations are encountering. The framework that they use doesn't quite take on board some of the blurry lines, particularly in private organisations, and whether they are operating for profit or non-profit. That causes some difficulty. So turning to stakeholders and their needs, the consultation paper proposes 4 main stakeholder groups. Service users, those are the people that actually directly benefit from the services being provided by an NPO. Resource providers, those are the people that provide the funds or the assets for NPOs, and they could be donors or they could be banks. Regulators, those setting the standard, and importantly, society at large. We see society having an important role. So they might not be directly benefiting from what an NPO does, but their community in which they are existing do, and therefore it's an important part of their community, if not for them individually. The consultation paper also proposes 4 main interest areas for NPO stakeholders, and that's whether the NPO is meeting its objectives, whether it's operating in a way that maximises economy, efficiency and effectiveness. Is it complying with regulations and restrictions, particularly if there's restrictions related to donations? And is it operating in its longer term health? In other words, it's not making decisions that consume resources now that will be to the detriment of potential future beneficiaries. And these needs are intended to support accountability to a full range of stakeholders and their decision making, not any one stakeholder or group of stakeholders. So keeping that focus on general purpose needs rather than specific needs. So that's a brief introduction to chapters 1 and 2 of the consultation paper. And we'd like now to move into breakout groups to discuss a couple of questions relating to those chapters. But before we break into those groups, I'd just like to explain how that is going to work. So you will be automatically assigned into a room. The assignment of you into rooms is completely random. There is no pre-thought logic into that. So you may or may not be with people from your own jurisdiction. Please remember which room you've been allocated into in case you get disconnected, and that will allow us to for you to rejoin your group. We will be asking that 1 or 2 people from your group operate as spokespeople to provide feedback about the group's discussions. So if you can bear that in mind. We've assigned a moderator to each of the groups, and their role is to encourage you to contribute, to try and keep you focused on the question for your group, and also to probe the reasons for your views. So their role is really to help the functioning of the group, and for the sake of clarity, they will not be the spokesperson for your group, so don't assume that they will pick up the running on that. They won't. Just in terms of protocol, please put up your hand if you'd like to contribute. The moderator will call you in, and we'd ask that you try and avoid speaking over each other. If your moderator disappears for any reason, please keep going. And we ask that the last person speaking call in the next person. Please be constructive, share your views and your reasons for your views. Sam has said that you have got some country champions and PAG members in the group today. If they are part of your group, they will be expressing their own views, not a project view. The question that we're asking you to look at will be put into the chat so that you can see that as a reference point. And lastly, to say that the breakout groups will be recorded, but that's for our benefit, so that we can use that to take notes. It's not going to be published at all. So we encourage you to be frank and open in the input that you provide. So to the questions, here are the questions that the groups will be looking at. Question 1 is about how NPOs are defined in your jurisdictions and how that links to the consultation paper. The second question is about who are the key stakeholders for NPOs in your jurisdictions. And again, how does that align with the consultation paper? And the third question is about accountability arrangements to stakeholders in your NPOs. So those are the 3 questions that we're going to address in the first breakout session. As I said, you will be automatically assigned to your group and you will have about 20 to 25 minutes, probably 23 minutes to have a discussion. Please make the most of your time and we'll see you back here in about 20 minutes or so. Joanna, you?
I've opened the rooms.
Thank you very much. People gradually coming back. Can see the number at the bottom ticking round, so
The rooms have closed. You can go ahead.
thank you. Waiting for the last few people to come back into the room. Great, thank you very much. Look, I hope you had some good conversations in your group, and would like to try and get some of the highlights of that back to share with the rest of the group. So I'm going to do this a room at a time. If I can start with room number 1. Sarah, was that you?
That was indeed. Thank you, Karen. Our question was, how are NPOs defined in your jurisdiction? What are the financial reporting issues that arise? And what difference would the IFR4NPO consultation paper make? And Ed very kindly volunteered, although we did encourage other people to volunteer as well, but Ed very kindly volunteered to take them present for our room 1 on that question. Thank you.
Ed.
Thank you so much for the platform. On question 1, look, we had 3 countries at play today. We had South Africa, Zambia, and Zimbabwe. And what we did realize was that most of our NGOs and NPOs, as they are called in different jurisdictions, they're basically the same structure. The idea is that institutions should not be a profit-making organization, and it should be for the value of society. And we realize that these institutions are not just institutions that crop up, but they are well-regulated institutions which have to go through particular registration systems, and they are regulated by state institutions. And on question 2, we realize that there are quite a number of, there are various number of reporting authorities which the NPOs have to subordinate themselves. And this includes the tax authorities and the registrar of NPOs. However, what we did agree upon is that whatever reporting is being done as far as financial statements are concerned, it has a burden to prove that the particular entity is indeed an NPO after all is said and done. And then on the last question, the benefits that we do see coming up is that if we have such an instrument, we're going to see consistency and comparability of information, both horizontally and vertically throughout the sector itself. You know, we're able to compare from one institution to another. We're able to compare from expectations from stakeholders and so forth. Then also the issue of transparency was raised to say we do need transparency to avoid the abuse of funds, and by creating a clear audit trail, and we believe this is one of the benefits of having such an instrument. And then lastly, it was on the relevance of what is being reported and what is being complied with. We have a situation whereby most of the colleagues were of the position that the IFRs sometimes are too onerous for NPOs, to the extent that they address issues which are not as practical to NPOs as should be. And having such an instrument is opening it up to have an instrument that talks ideally to what the practical requirements of NPOs are with regards to their stakeholders, that is the donors and the regulators in the industry. And that is what I picked up. I don't know if the colleagues would like to share, if I've left out anything.
Great, thank you very much for that, Ed. Very clear feedback from your group. If any members of the group would like to add to what Ed had to say, could you put any additional comments in the chat? Either a thumbs up or any additional points you want to make, we find really helpful. So thank you for that. So I'm going to turn to room number 2 now. Shegun, is that you? Were you in room number 2?
Hi, Karen. Yeah, that was us. Thank you. And so we answered the 3 topic questions: how are NPOs defined in your jurisdiction? Who are the key stakeholders for NPOs in your jurisdiction, and what formal accountability arrangements to stakeholders exist for NPOs in your jurisdiction? And Malusi is going to kindly share what we discussed.
Okay, thank you for the opportunity. Yeah, our group, we responded to question 1 on the NPOs, how best are they defined. We noticed that they could be defined according to the initial registration, taking note maybe we had 3 countries, Zambia, Zimbabwe, and South Africa. We noted that they might be registered as private voluntary organizations, yet we also have another group registered as trusts. But then we looked and noticed that the objective of the organization maybe is the one that will define what whether they are part of the NPO bracket. And your major objective there is the fact that they're a non-profit, and also they are there for the society. So we realize this is very much consistent with the guideline that we have so far. Then on the second one, we touched on the stakeholders, and we listed the funders, that is the donors, the governments, wherever the NPO is operating in. We also touched on the society, the beneficiaries of the work done by the NPO. Then also the partner organizations, an organization that will be partnering or working together with the NPO in question. We also looked at the reviewers, maybe even of the work that they do, and also of their financials. They could be auditors and the other regulating groups, maybe legal regulation also. And we also touched that there may be other civil society organizations that also sort of regulate or have an influence on the other NPOs as well. So that's another stakeholder. Then on the accountability part, we dealt with what we can call formal accountability, maybe by a government or otherwise. In South Africa, if I got that correctly, there is a government regulation on the NPOs, yet we also have others, accountability structures that are inbuilt in NPO works, like we talked of the CHS, which is the core humanitarian standards. It may not be financial, but it's part of the accountability aspect. It also touches on how financials should be looked at. The safeguarding policies, the use of hotlines is another one. The use of help desk in programming is another one. So those are the safeguarding mechanisms that we looked at, including the internal and external audit that are run, and as well as the donor regulations. So those were the accountability kind of arrangements that are formally there. I don't know whether the group could have missed something.
Great, thank you very much, Malusi. I think if there is anything you've missed, you covered quite a range of things in your feedback there. But if there's anything the group wants to add, if they could do so in the chat, that would be really great. Thank you very much. I'm going to turn to room number 3 now. Peter, I think that was you.
Yes, thank you very much, Karen. I think we had a similar range of countries represented, particularly South Africa and Zimbabwe, and Belinda has kindly offered to share a summary.
And can you just confirm which question you were answering?
Hi. The questions that we answered were actually the same 3 as group 2 has just reported back on. So it was
great, Belinda, thank you. So if you want to give us some feedback, that would be great.
The 3 questions were: how are NPOs defined in your jurisdiction? Who are the key stakeholders for NPOs in your jurisdiction? And what formal accountability arrangements to stakeholders exist for NPOs in your jurisdiction? So yes, as Peter has just said, we had 2 countries represented in our group. One person from Zimbabwe, and the rest of us were South Africans. So this will be more from a South African point of view.
Sure.
So how NPOs defined in your jurisdiction, I think the other 2 groups have covered it quite well. I think I'd just add that obviously different countries have different legislation and different requirements. For example, in South Africa, if you can be a company, a non-profit company, and have to follow certain requirements by the Companies Act. But then as an NPO, you have to follow certain requirements through the Non-Profit Organizations Act. So, and then in Zimbabwe, there were legal requirements there. So obviously, depending on the country you're in, there are different organizations that you have to be registered with, etc. Key stakeholders in our jurisdictions. Again, we've covered them. If you're following certain regulators where you have to report via the regulations that you are registered with, be that government or through other acts that have been promulgated. Then there's obviously your board. You're reporting back to them on financial viability and fulfilling your objectives as an organization. Then again, your donors, and we'll discuss a bit more in the 3rd question, the different requirements of donors there. We also talked about preparers of annual financial statements. The one gentleman in our group was saying that they have different branches and have different preparers of financial statements, and they do different, they prepare them differently depending on where they are and who they're dealing with. There's no harmonization there. And then obviously the public, most of the NPOs that we were talking about were for public benefit. So obviously the public at large is one of the key stakeholders for NPOs. So I think it's a very broad range there. And then going on to the 3rd question, what formal accountability arrangements for stakeholders exist? I think I've touched on that a little bit as well. So formal reporting through the different regulators, formal reporting through the board, and then I think the big discussion that we were having about is the different donors and what is required by them as far as accountability goes. So some donors want very, very specific detailed reports, where others want quite simple ones, and certain donors have very onerous requirements where others might not have such, and it's to bring all those together when you're reporting to some stakeholders who want to see an amalgamation of all of that, and certain donors who just want formal, specific reporting in the way that they would like it done as such. So for us, it was really looking about trying to get standardization, consistency, and to be harmonious for all of those things. I hope I've covered that.
Thank you, Belinda. You too have covered quite a lot of ground in your response. So if there is anything else that your group would like to add, please do so in the chat. I'm going to turn to room 4 finally. Richard, if you could introduce your question and your spokesperson.
Thank you, Karen. Our question for Group 4 was, what formal accountability arrangements to stakeholders exist for NPOs in your jurisdiction? We had a similar makeup of countries, and Lawrence has kindly volunteered to speak on behalf of the group. Thank you, Lawrence.
Thank you very much, Richard. My name is Lawrence. I work with Save the Children Mozambique, but still based in Uganda. And we looked at the number of jurisdictions. We had 3 countries represented, that is South Africa, Zimbabwe, and Mozambique. We looked at the jurisdictions. We looked at registration, operational compliance, reporting, and accountability. In terms of registration for Zimbabwe and Mozambique, it was not so clear. So any NGO can start up, NPO can start up and operate, provided they are able to comply with tax requirements. Whereas for South Africa, it was so clear. There's a clear categorization of INGOs or of NPOs, sorry. There's a clear checklist for registration, and there's clear tax exemptions for NGOs. There are some which are zero rated, there are some which are income tax exempt, and it seems to be that it's a well-established system there. Although the number of organizations which are expected to maybe report range from community-based organizations to pressure groups to NGOs, and I think getting a harmonized reporting requirement can be a bit of a challenge. Then the other one is financial reporting. I'll ask my South African colleagues to maybe expand on that. For Zimbabwe, it is really wide. The legal framework is not so clear for the different organizations, and for Mozambique, it's also not clear. Compliance is mainly to do with taxation and social security fund and a few other things. But specifically, when it comes to the legal framework, I try to look at it, and it's not clear how you can apply it, because it's different from the different sizes of organizations. So having a harmonized legal framework is there, and knowing what is acceptable and not acceptable is a bit difficult. Like you'll find maybe an organization like World Vision is income tax exempt for expatriates, and maybe Save the Children is not, yet you think they're doing the same kind of work and reaching same beneficiaries. When we looked at the accountability mechanisms, we observed that the accountability is more to the donor rather than to the government and the the beneficiaries who are actually being targeted by the NPO. So we thought if there's a clear, simple, reporting mechanism to beneficiaries, which is not complicated, that would add value. Thank you so much.
Great, thank you very much, Lawrence. That was really interesting feedback about regulation there and how it differs, and obviously what a big influencing factor that is. So again, if anybody from Lawrence's group wants to add anything into the chat, that would be great. Always love to hear from you. But I'm going to move us on now. So I'm going to bring the slide deck back up and move on to our next topic, which is, so I just need to make my computer respond, which is about the chapter 3 of the consultation paper, which includes 2 key premises that we are suggesting underpin the basis of the guidance. And these 2 premises we believe to be essential to meeting stakeholder information needs and the guidance objectives. So the first of the premises is that the guidance will be accrual based. And the chapter notes that the type of financial reporting carried out in jurisdictions depends on a number of factors. And that includes obviously local financial reporting guidance, the legal form of an entity as just was observed in the feedback we just heard, and the influence that donors have over the financial reporting of an entity. And the consultation paper looks at 3 bases of preparing accounts: cash, modified cash, and accrual. And for clarity, what we mean by cash is that economic events and transactions are recognised when the cash is received or paid, and assets and liabilities are not recognised. By modified cash, we mean that some economic events and transactions are recognised on a cash basis, but others might be recognised on an accrual basis, which means that some assets and liabilities may be recognised. And by accrual, we mean that all economic events and transactions are recognised when the event occurs, and therefore assets and liabilities are recognised. So there's a spectrum that the consultation paper recognises. And in chapter 3, we look at the advantages and disadvantages of each in terms of how they meet the guidance objectives that I shared with you before we started looking at the topics. And this analysis acknowledges possible challenges around existing knowledge and capacity and capability to use accrual-based standards, and also the potential for complexity that it might introduce, and that donor reporting is not always required on a full accrual basis. So the chapter explains that accrual-based accounting is internationally recognised as the best basis to provide a comprehensive view of the organisation's financial performance and position. And that's why we have it as a core premise. And because of that, it improves the quality and transparency of financial reports and enhances accountability and decision making, which is key for stakeholders. The second premise in the consultation paper is that the guidance will include non-financial reporting. Arguably, this is more important for non-profit organisations than it is for other types of entity, as it provides an opportunity for entities to explain more about what the organisation is delivering that wouldn't necessarily come directly from the financial statements themselves. So non-financial reporting might include areas such as an entity's nature, its purpose, its objectives and forward strategy, but also its risk and regulatory compliance. So a far more rounded view of what it does. And through that, it can demonstrate the impact that its projects and programs make, and the wider activities of the organisation on the communities that they're seeking to serve. So non-financial information can provide context to financial information, and it can provide additional information about the organisation. So potentially has a huge amount of value. So these are the two premises that are discussed in chapter 3 of the consultation paper. And so our next set of questions concerns those two premises. So the first question is about the accounting basis used for general purpose financial reporting in your jurisdiction by NPOs. The second question is about how accrual accounting can support and improve accountability and financial management. And then the third question is about what requirements currently exist for non-financial information in your jurisdiction. So in answering those questions, those that are in Sarah's group and Shagan's group will answer question 1. Those in Peter's group will answer question 2. And those in Richard's group will answer question 3. As before, you'll now be allocated out to a breakout room by Joanne, who will allocate you out now. And we look forward to seeing you back in about 23 minutes.
Great, here they come. Super.
Yeah. A few more to come back.
See if we get some different spokespeople this time, or the same ones.
We find out who's brave and who's not. Shouldn't be about courage.
The rooms have closed.
Thank you. I can see people coming back in. Great. I think we have the last people coming back in. Great. Thank you very much. I hope you had some good conversations as part of those breakout sessions too. And like before, we'd like to hear back from each of the rooms in terms of the conversations that you were having to share with others. So I'm gonna start this time with Richard. Can you tell us about your group, please?
Thanks very much, Karen. So the question for our group was the third question, which was what requirements currently exist in your jurisdictions for non-financial information reporting, whether required by regulators, donors or others. And Tabo has wanted to speak on behalf of the group, so thanks very much.
Thank you.
All right, thank you again for this. So in our group, we came up with a couple of stakeholders. I think the big one is the United Nations Sustainable Development Goals, definitely top of the agenda. How are the NPOs, addressing, alleviation of poverty, education, equal rights, and climate change and all that. So those are areas that we found. And then there's also donor imposed requirements, and those would include mandatory audits of the financial statements, which needs financial statements, annual reports, management reports, and an external audit report, and in some instances an internal audit report, just to give that layer of assurance. I forgot the other one. I forgot the difficult one. Yeah.
Can I just ask, whilst you're thinking about that, do donor imposed requirements include non-financial reporting?
Yes. Okay. Yeah. this is the one that I forgot. So performance information is part of it. Setting up targets in your strategy, making that applicable to your annual plans, and then, quarterly reporting, and then reporting again in the annual report. And then in some instances, the auditors will then have to report to the donors on, the achievement of those targets as a non-financial requirement. Yeah. Thank you.
Okay. Sorry, can I just ask one more question?
All right.
Of your group, were there any government or regulator non-financial reporting requirements?
Not that I can remember.
Okay.
You'd be more than welcome to help me.
Great. If anybody else from the group have got any comments on that, questions on that, please, if you could feed those into the chat, that would be incredibly helpful. So thank you for that. Thank you, Tabo. I'm going to turn to room 1 and Sarah. Can you provide feedback on your group?
Hi, Karen, thank you. We're in group 1 and we had the question 1, which is, what is the accounting basis for general purpose financial reporting for MPOs in your jurisdiction? Who is the regulator that sets this? And what are the advantages and disadvantages of your existing general purpose financial reporting guidance? We had 3 countries in our group, which was Zimbabwe, South Africa, and Zambia. And Alice very kindly volunteered to present for our group.
Thank you.
I'll hand it over to Alice.
Hi, Alice.
Hi. Okay. So for our for the accounting basis, for I think all 3 countries, we said the common one is the cash receipt basis, and the modified cash basis is also one of them, but with the highest one being the cash receipt basis.
Okay.
Then on the issue of who's the regulator, we all had one common answer for all countries to say there's no regulator.
Okay.
Then for the advantages and disadvantages of these 2 methods, we had quite a lot of points, but I'll just say a few. One of the disadvantages was that when you're using the cash basis of accounting, you are not capturing things like assets, because assets are expensed. So therefore, they can easily be misappropriated if there is no strong control on the asset register that where these assets are maintained. So we said that is a disadvantage. Whereas if they were in the financial statements, it can always be easily traced from the financial statements to where the assets are. And then the other issue or disadvantage was that these methods do not inform the full events of the operations of an organization. If, for example, an event has happened and there is no cash that is received, that event is not captured. Therefore, for someone who's looking at the organization to see what happens in the sector, they are misinformed about the actual events that really happen or in terms of operations in that environment. Then the other disadvantage also was that liabilities cannot be traced. Yeah. So you then just see what was paid and what was received, but what about the liabilities that have not been paid? So which means it doesn't give the full picture. You could be looking at the organization and saying they have a surplus, but maybe in the meantime, they also do have utility bills that have not yet, that have been accrued, but not yet paid. So it doesn't give the full picture of the organization. Then for advantages, it's easy to just use the cash and receipt basis. You just record what is come and you record what is gone out. So it's pretty easy and simple. Then also for others, they were mentioning the issue that it's also easy to do close out transactions with donors, because then you just say, this is what happened, this is what was received and what was expensed, and this is what is left. It's simple and easy. So those were the advantages that we had.
Great. Thank you very much, Alice. Really clear. Great. And if anybody else from the group that Alice was in wants to add anything to that, please do so through the chat. But that felt a fairly comprehensive piece of feedback, Alice. So thank you very much indeed for that. I'm going to turn to room 3 next, and sorry, yeah, room 2 next. Shagan, can you give us some? I think you were answering the same question, is that right? And
yeah, thanks, Karen. Yeah, we were answering exactly the same question as group 1, and Sally was volunteered. Thank you, Sally, to feedback.
Thanks, Sally. Hi there.
Hi, thanks a lot. Yeah, what we discovered in our group that most times the donor states the terms and of reference, and they'll say what is required. And in general, cash accounting, cash basis is what is required to account for the funds that they've given to you. Those some countries, there's a bit of modified just to account for the assets, but not so much. But most of it is cash. Accrual, I think it was just one person that, if I do understand, or if I do remember correctly, that said there's a bit of accrual.
Let me just finish up with you guys.
There's a bit of accrual, and then in some countries there's no specific thing of how you should report. Basically, most of our countries, it's the donors that dictate. And what we've realized is the donors want us to account for the funds that they've given through the income and the expense accounts. And then also the terms of reference may also require the non-financial reporting, because the donors want to really know whether they've been, as I've said, impact, or what has been the output, or what impact has their money created in that economy, because they're also answerable to their taxpayers, because the whole purpose of most of this money is to improve the standard of living for the country. So also that was on the non-financial terms. Yeah, I think, and then also we said that most of the SMEs want the cash basis. So we're saying that we should not really discount the cash accounting basis, because accrual sometimes is tedious, and some of the SMEs may not manage with their accrual accounting. So I don't know if I've captured everything. And then I think one of the participants said the accounting is done at head office and not in their country. So if it's done at the headquarters, that's where the accounting framework will be dictated. I hope I've captured a lot, but basically most countries is cash accounting.
Okay. Thank you very much, Sally. That was great, really clear. And if anyone from the group that Sally was in wants to add to that, please do so. But that was really great. Thank you very much. And so finally, Peter, can we turn to your group? You can tell us which question your group were answering and who's going to speak on behalf of the group.
Thank you, Karen. Yes, so our group looked at the question, how do you think accrual accounting could support and improve accountability in financial management? And Tinashe has volunteered to feed back to the plenary group. Thank you.
Thank you. Hi, Tinashe.
Hi, Karen. Thank you. Okay, we're discussing the impact of accrual reporting, accrual accounting on financial management and accountability. So basically what we managed to pick up was that there's a behavior alteration, or there's a certain behavior that is caused by introducing accruals accounting. we can look at the situation like this. If you stick to cash basis, someone will always want to be restricted to working within that very same year or that same period that they've been granted the money. So it then makes them behave in a certain way that the money has to be finished no matter what, because there's no carryover. So pretty much cash accounting brings into, it makes the whole accounting be sort of like a cash income and expenditure basis. There's no carryover. In other words, the balance sheet does not exist. I believe I'm supporting what earlier colleagues were talking about. One of our group members raised the issue on revenue recognition. Let's say you get money for 3 years, and then you receive the money in one go. The cash basis does not allow you to have deferred income. You are usually you actually recognize the revenue immediately, and you are not deferring it simply because the balance sheet or the statement of financial position doesn't exist. So it takes away the concept of matching expenditure to income. So definitely then makes the usefulness, the accountability, financial management not so good, right? And the whole issue of completeness of financial information. We're talking about fixed assets, property, plant and equipment, whatever has been bought is immediately expensed if it's cash basis. But if you do to allow accruals basis, it immediately brings the balance sheet into action. And obviously, when you've done that, when you've recognized assets, it improves your financial management because you don't always have to be buying things from year to year to year. You can even help donors in actually channeling money where it's most useful or where it's most needed, right? So, and also, if there's deficits, how do you then fund a deficit if you've taken away the whole aspect of the accruals basis, right? But obviously, it will come with its own challenges. Accruals basis, I believe the people we've presented before have actually touched on the issues. We spoke of legislator buy-in. How is the legislator? Have they bought into accrual basis for the sector? If they do not, then definitely it's not possible to implement it. Then obviously you've got personnel who are currently employed in the MPOs. Most of them, they are not even qualified to be talking about accruals basis. It's complicated. And then funding partners. We're talking IFRS, we're talking IPSAs. What does the funding partner require? The funding partner will simply tell you, we want cash basis. So then it then becomes difficult. So there has to be a buy-in also from them for us to be able to then use that. Then another group member then spoke of the element of judgment. Whenever we introduce accrual basis, there's a certain aspect of judgment, like the whole deferred income part that I've just touched on. How do you then defer? How do you apportion? How do you introduce, whether it's amortization of that, whatever you're introducing, it then causes there to be judgment. And when there is judgment, usually comparability then becomes very difficult. So pretty much, I think that's what we discussed regarding the benefits, the improvements in accountability, and then also the benefits or non-benefits to financial management. Yeah.
Thanks, Tanashi. That was great, and again, pretty comprehensive feedback from your group. It sounds like you had a great discussion in your group. So thank you very much for that. And again, if anyone wants to add to what Tanashi had to say, please add that into the chat. That was really great, and I really appreciate the contributions that you have all made to the conversations in your breakout group. It sounds like they were really good and provided lots of points and perspectives to bring in there, which are really helpful for us as a project team, and I hope have helped you as well think about some of the issues that we're talking about in the consultation paper. So I'm just going to hand over to Sam now to kind of wrap up for our session today. Thank you very much, everybody.
Great, thank you, Karen. So yeah, so let me just echo that. Thank you so much for your participation. And it's clear that obviously we have a lot of expertise and experience in the room, and that really has resulted in some really stimulating and interesting perspectives and views. So thank you for that. If you have anything you'd like to follow up, please do email me after the meeting. I think you've all got my email address, but I'll pop it in the chat just in case. Where's my chat gone? It disappeared. I'll pop it in there. So it's sammusoke.org. And we're just really keen to stay in touch with you, and please feel free to reach out on anything to do with this meeting. So especially as this is the first of 2 sessions, it'd be great to hear any feedback that you've got, and anything we could do differently next time or for other regions. And also, if you know of other people who you think would be, having seen how this meeting worked, if you think they'd be interested to come to the next one, do let us know. And there's a place where they can apply for an invitation on the website. So that'd be great. Next week, we'll be meeting on Wednesday at the same time. Please do come. It's different from this meeting. It'll be different topics, and I'll send around a follow-up email that gives you links if you want to check out the web pages for the topics that we'll be discussing next week. So I think the final thing for me to say is to ask for a photo. So I wonder if you mind putting your camera on briefly, and we'll take a photo for ye olde social media. That would be super, to prove that you were here. I can see some cameras coming on.
You can all be social media stars. In fact, we encourage you being there.
Absolutely, we'll put out a post. If you see it on the IFR4NPO LinkedIn or Twitter, then please do forward it so we can. You can say I was there, and you can get your name out there as well. So I'm just waiting for a few more. If you're able to turn your camera on, or maybe it's my link. I'm only seeing one camera at mine, but that can't be true.
No, most people are now showing their
so
their
if
picture.
I do 1, 2, 3, smile, can I ask Joanne, would you be able to take, because I'm just not seeing them, would you be able to just do a print screen and take a picture? Okay, so I'll take my glasses off.
You've encouraged everybody else out. Cheese.
I know, 1, 2, 3, smile. Okay, let's go, smile. Great. Okay. Well, thank you so much, everybody. We'll see you next week, and really, really delighted with the conversation we've had today. It's been such an honor and a privilege to spend time with you all. Thank you so much.
Thank you very much, everybody. Take care. See you next week.
Thank you.
Thank you.
Thank you.